So I know a lot of you watching like the idea of just buying an ETF and holding it for the long term and not having to deal with researching different companies and checking out financials and their earnings reports. And holding an ETF long term is really what you're looking for. Now, there's a lot of choices out there when choosing an ETF, and it might seem a little difficult or daunting to be able to pick the right one and then not be sure if you chose the right ETF or not 3 to 4 to even 6 months down the road. Today, I wanted to give you 3 separate ETFs for 4 different styles of investing. And what you're looking at here is my investing style quiz. And I put this together because I would find myself jumping in and out of stocks and I didn't know what type of investor I should be or what type of investments I should be putting my portfolio in. So I built this calculator because I was always jumping in and out and wasn't sure if I should be buying income ETFs or if I should be buying individual companies like the blue chip or the dividend investor, or if I should just be holding the indexes like VOO or SPY, or should I be going into growth stocks, or should I become a swing trader or possibly even a day trader. And today I wanted to talk about the investors that actually would potentially buy an ETF. The other style investors may not be specifically looking for buying ETFs. They might be buying something like a CD or a money market fund, or buying individual stocks like just an individual Apple or Microsoft, or the swing trader and day trader is going to be buying in and out of separate stocks. They don't care if it's a stock or an ETF. They're just looking to make a quick buck. These are the 4 style investors that are going to be buying ETFs and holding them long term. You can skip ahead if you would like to only see the 3 ETFs for your style investments. So let's get started with the income investor. The first ETF on the income investors list that you may want to hold long term is JEPI, JP Morgan's Equity Premium Income ETF. And just a quick explanation of what they're doing. They're writing options based on the S&P 500 index. So what does that give you? That gives you, they claim, around a 7% yield on an annual basis. Let's take a look at their price appreciation since the start of the fund. If we click max here on Seeking Alpha, we can see since they've started, the fund has been pretty tight. You can see there's been ups and downs. However, this is a pretty tight range of around $50 all the way up to $60. So this fund is not based on price appreciation. This fund is going to fluctuate slightly, but most of the income or capital appreciation from this fund is going to be from the dividend yield. Now remember, this is the income investor, someone who is just looking for incomes. And JEPI would be a solid ETF to hold long term for someone looking for very decent annualized yields. The next ETF on the income investors list is SVOL. SVOL is Simplifies Volatility Premium ETF. Very similar to JEPI, they employ options to be able to give you the income that you are looking for. What does that look like on a graph? Well, if we take a look at SVOL, their max graph, again, you can see there is some fluctuation. However, it doesn't fluctuate a lot over the past 3 to 4 years. It's gone up to about 28 and it's settled around 22. But take a look at SVOL's yield. It's sitting at 16%. So if you're looking for some consistent returns, 16% per year, which is going to equal around 1.1 to 1.2% yield per month. However, you are paying a 1.16% expense ratio to be able to hold this long term. So SVOL is a very solid long-term play for the income investor. Let's take a look at the third and final ETF for the income investor, and that would be JP Morgan's NASDAQ Equity Premium Income ETF, JEPQ. What is JEPQ? Very similar to JEPI, except they are buying and selling options on the NASDAQ 100 instead of the S&P 500. So what does that give you? That gives you a slightly higher yield, at least in this environment where the NASDAQ has been going up and to the right. That gives you around a 9.5 to 10% annualized yield, slightly higher than JEPI's 7%. And it's working in this environment where tech, which is a large portion of the NASDAQ, tech has been doing very well recently. So what does JEPQ look like on a graph? Well, taking a look at their max time period, the fund started May of 2022. Again, with the other income ETFs, very similar. There's fluctuation, but the price fluctuation does not reach too far from its basis, all the way down from 40 all the way up to 55. But this fund is not based on its price appreciation, it's based on its dividend yield. And it's sitting at, right now, the past 12 trailing months, about 9%, with an expense ratio of 0.3. So those are the 3 ETFs that you would buy and hold long-term for an income investor. Next up, we have the index investor. So the first ETF I want to talk about for the index investor is ticker symbol VTI. It's Vanguard's Total Stock Market Index Fund ETF. And over on Vanguard's website, we check out their performance. The past 10 years, it's sitting around 12% per year. But if you go all the way back to 2001, it's sitting about 8.5% growth per year. So what does VTI look like on a graph, and what type of holdings does VTI have? Taking a look at the past 1 year, it's had 19% growth over the past 12 months. Dividend yield sitting at 1.3% with a very low expense ratio. And that's one of the attractive things about being an index investor, is if you buy the right ETF, your expense ratio is very low. So a 0.03 expense ratio equates to about $30 of fees per $10,000. And Seeking Alpha also has a holdings tab for each of the securities that you look at. And coming down to the bottom of the page, you can see VTI holds pretty much the entire stock market, or anything worth of any value in the stock market, about 3,600, 3,700 holdings. And it still holds a good bit in Microsoft, Apple, and Nvidia, the largest companies in the market. If you add the first 3 holdings together, you're looking at around 17% of the entire ETF is in Apple, Microsoft, and Nvidia. The next ticker symbol we want to talk about today for the index investor is ever popular VOO. VOO is Vanguard's S&P 500 ETF, so it's more concentrated toward the top 500 companies in the stock market, where VTI just holds a broad array of stocks. Vanguard VOO is more concentrated to the top 500 companies. So what does that give us in performance? Well, over the past 10 years, it's been very similar to VTI in about 12%, and its inception date was 2010. So it didn't take part of the 2008 crash, so these numbers are going to be higher than VTI, as VTI was started in 2001. So what does VOO look like on a chart? Over the past 12 months, slightly outperforms VTI at 20% per year since 2010. If we take a max look at the chart, you can see simply investing in 2010, we've had almost a 5x return from $100 per share to about $500 per share. So that equates to, if you had $10,000 in 2010 invested in VOO, you'd have about $50,000. Similarly, if you had $100,000 in VOO, you'd have about $500,000 here 14 years later. Just taking a quick look at the holdings of VOO, the top companies, very similar to VTI, are Microsoft, Nvidia, and Apple, with a little bit of a shakeup. I believe Nvidia was third and Apple was first, Microsoft second for VTI. And if you add the top 3 holdings, you're only looking at around 19 to 20% of VOO is held in the top 3 biggest companies in the stock market. Coming down here to the number of holdings, it's sitting around 507 according to Seeking Alpha. And the third ETF on this list is QQQ. QQQ is Invesco's ETF that tracks the NASDAQ 100. And it has claimed that it has beat the S&P 500 out of the last 10 years. So what does that look like in percentage? They're claiming over the past 10 years, you would have had an 18.67 increase per year. What does QQQ look like on a graph charted out? If we take a look at the max time frame, going all the way back to 1999, there would have been close to an 8-fold increase over about 25 years. So looking under the hood of QQQ, you can see it's definitely more tech heavy, with again the top three companies being Apple, Microsoft, and Nvidia, where the top three companies are close to 24% of the entire ETF, with a higher concentration of holdings sitting at around 100. So depending on your risk tolerance, if you believe that technology is going to continue to outperform over the future, you could hold a little bit more QQQ and underweight VTI and VOO, or you could hold each of these three funds at an equal weight. Next up, we have the dividend investor. And the first ETF that a dividend investor might hold would be SCHD. SCHD is Schwab's US Dividend Equity ETF. Taking a look at their price performance on their website, they claim the past 10 years they've annualized around 10% per year. But you also are getting a dividend, a higher dividend than the index investor. What does SCHD look like on a graph? Well, over the past 12 months, the price share has increased around 8.8%, but you've also received about 3.5% in dividends. What do the holdings of SCHD look like? Well, unlike the index investor, where their three ETFs were more weighted in the technology sector, SCHD is looking for stocks that have a higher dividend, and that is usually in the financials and healthcare sectors, with Home Depot, Amgen, and UPS as their top three holdings. And SCHD is currently holding around 100 stocks. The second ETF a dividend investor might buy is VYM. VYM is Vanguard's High Dividend Yield ETF, and their 10-year price performance has been around 9% per year. VYM over the last year has seen a 13% increase, but they also pay you about a 3% yield. And looking into the holdings of VYM, again, very similar to SCHD, their largest sector is the financial sector, with the top three holdings in VYM being Broadcom, JP Morgan, and ExxonMobil. And VYM is going to hold close to 550 stocks. And the third ETF a dividend investor might hold is DGRO. DGRO is iShares Core Dividend Growth ETF, and over the past 10 years, you could have expected an 11.3% return per year. So what does that look like on a graph over on Seeking Alpha? Well, the past year, there would have been a 13% price increase on the share with a 2.3% dividend yield. And as the last two dividend ETFs, DGRO holds the highest weight in the financials sector, with the top three holdings being JP Morgan, ExxonMobil, and Apple. And the total number of holdings for DGRO is 416. And finally, we come to the growth investor. Now, the growth investor is looking for outsized returns, maybe even double or triple the regular market, the regular S&P 500 or the total stock market. So they're going to be accepting a little more risk. So in periods of bear markets, or when the market is headed downwards for a week or two, these ETFs may see a larger drop compared to the other style of investments, but that is the risk that you take being a growth investor. Now, some people may put some sell stops in depending on how they want to trade, and the growth investor may sell out of their investments altogether and wait until the market looks like it's coming back up. So the first ETF on this list is SOXX, and this ETF is what is trending in the market right now. Semiconductors are trending, and you will see by the price performance of SOXX. SOXX is iShares Semiconductor ETF. Taking a look at their price performance, they've grown 25% per year on average over the last 10 years. What does that look like on a graph over the past 10 years? That's around a 7.5x return. There is a small dividend yield as well as an average size expense ratio of a 0.35%. What does SOXX look like in its holdings? Well, it only has 35 holdings, and it is all in the technology sector, with the top 3 holdings being Broadcom, Nvidia, and Advanced Micro Devices. The second ETF on this list, and it's another semiconductor ETF that has actually outperformed SOXX. And no, the third one is not a semiconductor ETF. However, semiconductors have done very well over the past 2 to 3 years, so they are definitely on the growth investors list. SMH is VanEck Semiconductor ETF. Taking a look at their price performance over the last 10 years, they've seen a 28% increase per year. What does that look like on a graph? Well, that is close to a 9.3x return over the past 10 years. If you would have invested $10,000 10 years ago in SMH and held it without selling out, you would have realized a gain of about $83,000. So $10,000 to about $93,000 10 years later. What does SMH look like in its holdings? It holds only 26 holdings, so a little bit more concentrated than SOXX, with most of its holdings being in Nvidia and TSM. Something else I like about Seeking Alpha is checking out the Peers tab. You can see similar ETFs to SMH, and you can also see the price performance compared over the past one day all the way up to the max choice, and SMH has outperformed all of these other ETFs, with SOXX actually being on this list. And last but not least, on the growth investor ETF list, they might be interested in an ETF such as TQQQ. Now, I know TQQQ is a leveraged ETF, and it could be more of a trading play instead of holding long term, but you could also hold it long term. TQQQ is ProShares triple leveraged QQQ or NASDAQ 100, and if you were to hold it long term, such as the past 10 years, you would have seen an average of a 37% growth per year if you held it for 10 years without selling out. What does that look like on a graph? Well, that's almost a 2,000% return over the last 10 years. So if you had $10,000 in TQQ and you never sold out, you would have realized your $10,000 turning into almost $200,000. And TQQQ also does provide a dividend yield, which almost covers their expense ratio. And TQQQ is just a mirror of the NASDAQ 100 QQQ ETF with very similar holdings. So that is 3 ETFs for 4 different styles of investing. You can hold all 3 of these ETFs for each style long term. Let me know what you thought in the comments. And with that, thanks for watching.